Hello and good morning to week number 17 of the year. We are over 4 months down. A lot has happened. We have finally arrived to the week of the French election. If you remember, 5 years ago, I should say, that started a massive, nearly 2,000 pip rally in EURUSD over several months. So it was an incredible period. Right now, we are in a scenario where one or two of the influence and factors for euro are exactly the same like they've been in 2017. But on the other hand, you have a Fed that is aggressively looking to tighten monetary policy. And I think that is hampering possibly the EURUSD trade. We're going to have a look at a couple of data points to get a better picture of what's happening with the French election. We'll also have a look what lies in a week ahead. And hopefully we find one or two trade recommendations that we can pounce on for the coming week. Starting off with some of the informations we will use to figure out how well euro could be doing after the election. It's always worth to have a look at cftc report. This cftc report gets compiled by Scotiabank, and it tends to give us a good read on how market is positioning. So I'm going to spare you time reading for all the sentiment analysis. Again, with CFTC data, you don't want to look at one data point. You want to see what happened the last 4 weeks, 8 weeks, sometimes as far as 3 months to get a feel for what the trend is here. To save you all that reading, the trend has been, market's been selling pound, and the continued selling pound, and market is continuing to buy euro. Just last week, it looks like they have taken some off on the euro positioning, added some shorts. So it's some interesting dynamic. You can see a bit of a trend change here where they saw higher euro, higher euro, higher euro, and now the net position sits a little bit lower. But on the short position on pound, there has no change. Aggressively going pound short. And we saw that now last week where we saw a very confident move under the 130 level. Something that we've been waiting for so long. I'm first to admit it was long enough to get me out of the trade, because I was several times trying to short USD, but there's nothing more to erode your confidence than a choppy market and nothing happening. But that trend is certainly still in place, so lower pound. Reflect the risk that EURUJPY should really thrive in this environment. So you got euro longs building up, you got net short position going long, short on pound. Naturally, you would think EURUJPY should do really well in this environment. If you feel like I don't want to trade the dollar pairs because I'm not too sure what's happening with the dollar, EURUJPY was one of those trades that should have done really well, and more or less it did. However, the way it did it was very unorthodox, isn't it? So it did this massive rally, bounced back, did another massive rally, and then undone this entire rally. To be honest, on no new information, it was mostly flows. So we saw this happening. And well, it was quite interesting to see, because I was long myself, and we were long in the trading room. And let me see if I can find the level we were trading at. I like to think it was around these levels. I think it was around, yeah, I think it was around, no, it was around these levels. I think we were long. And then we had this last spike out, which proved to be enough to kick us out of the trade. I do apologize. It was around these levels we were long. And then there was some good news after one of the weekends where Macron seemed to be in the lead. We saw a good push up higher. We saw a gap closed. And from here on, we really should have seen another rally, but there was just market squeezing. We're looking for better levels to go along. And that's when you see this move happening. So the entire move really wasn't under question. It was how it's going to happen. We finally see this 0.84 level take now, which was quite important to me. But I don't think that will be the end. There might certainly opportunity to see EURUJPY trade higher, specifically if you examine the yield spread between these counters. I'm going to pull that quickly up just to show you that as well. Just to make sure, really, if you think it's going to go high, is it really going to go high? Is there still room to go for that pair? So based on yield spreads, there seems to be some encouraging signs. However, all of that will come down to what market reaction is going to be to the election, to the French election. So come Sunday, come Monday, you're going to have a better idea if you still want to explore higher levels in EURUJPY now. That's something you need to keep tabs on. Apart from that, I don't really want to dig too much more into that report, because some of the other movements haven't been that aggressive, I don't think. Quick look on gold, because I'm interested in gold, and it looks like bullish position is decreasing as real yields are pushing up. You might know the relationship between gold and real yield, but usually they move inversely. At times, the inverse correlation is close to 90%. So it's really good gauge to know real yields are moving high. You expect gold to come down. This relationship recently, over the last 3 or 4 months or so, broke down, which made it a bit more difficult to analyze gold. But it looks like now we've fallen back in line. We're seeing gold levels coming down a little bit. And I'm going to show you that on the weekly, because it makes a bit more sense when you see it on the weekly. How gold reacted. So you saw some squeeze up high and then this bearish outside bar. In my opinion, in the way that data is coming through, you would expect gold to come down, right? You would expect it to come down based on real yields. But there's a couple of other things we have to take into consideration to time the trade right. I'm still expecting this to come lower now as we have this nice formation. But for me, the question will be, am I going to see another retracement about the 50% level of this candle, which could put us somewhere between 950, 960? Are we going for a straight dump from here? So I will need to negotiate that as we are trading within the week. But certainly I'm really starting to get interested on the short side for gold. That wraps up what I really wanted to look at, CFTC data. Moving on, a little bit more read about the, let me see if I'm on the right website here. No, this is the wrong website. I'm looking for this one. We're looking at Politico, quite good website to see what is the sentiment on the political Europe side. I never really follow it unless there's something to read about. So it's worth reading and look through what you think the runoff will be in the French election. See if there's anything jumps out. Really what I wanted to see some graphs, who is ahead, who's not. And see if we can find this chart here. Poll of polls, what's that saying? I love these. So basically what it says, recently it looks like Mr. Macron moved up. And it's looking very encouraging. It really looks like he's going to win it by a good enough margin, good enough to call it a solid win. So I don't really have doubt about that. I think my doubts are more likely about to see what Euro will do. And that's what I was trying to say earlier in the video. We have two dynamics which are exactly the same like it was in EURUSD. So EURUSD, you may or may not know, and I've said it so many times, it gets boring, but I'm going to say it again. Since November last year, so am I in a monthly candle here? Yeah. So since November last year, which was around here, right, these levels, Euro bulls have been starting to gobble up Euro, and they created this three-month range of Euro not going anywhere. Then the war happened and it came lower. But those Euro longs, 50% of held on, and most recently they're all added in this dip. And that makes you think, what are these speculators doing? Why are they buying here for the better part of now nearly 1, 2, 3, 4, 5, going into the 6th monthly candle? They're holding to Euro longs. Do they think that this election outcome will finally give them the burst that they see in 2017? Because in 2017 we had exact same scenario. So Euro longs have been building up in a crashing market, right? And it did nothing. It did nothing. French election came and you couldn't catch it. You couldn't catch it anymore. It was just going non-stop. So two of the dynamics that were in play back then are exactly the same. I've mentioned one. I mentioned the positioning build-up. The second one was that the ECB turned incredibly hawkish. Back then, around then, they said market is Euro is into reflationary, and everybody started going positive on Europe economy. Everybody started to get exciting. Bear in mind, back then, even in the day, Fed was still hiking rates, so they were in a hiking cycle. So there was nothing to say, look, there's like this scenario where the Fed is already hiking. Why should we be bullish on Euro? No, market, when you went bullish, loads of investors started to put money into peripheral bonds like Portugal, Spain, and also loads of the indices in Europe found a solid bid. So that was the dynamic back then. And right now we're in the same dynamic. The ECB is starting to turn hawkish and about to raise rates. So it makes you think, we have two of the dynamics exactly the same. And it really was difficult to hold a positive, right? To hold a positive view on euro when you saw all of this mess, right? And you're in this mess, and news media says, look, we're going for parity. This is about to break. And it was really difficult to hold a bullish view on euro. Back then, I was a little bit more pro-risk, so I was quite happy to take these risks, and I traded quite actively. But right now, with what's going on with the war and stuff like that, I'm a little bit off risk, and you can see prices reflecting that. So we're in a little bit of a pivot here. Do you want to go all in euro, thinking we are going to have the same results? Market is off guard, and all the speculators been adding over the last 6 months are correct. Then very quickly, we're going to see EURUSD back at 115 levels very easily. But for me, that is a catch it if you can situation. Don't front run it. I really wanted to point this out as it's quite an interesting thing to see. And while we're on this subject, I'd like to bring up the yield spread between Germany, so Bund Treasury yield spread, to see if you're going to see anything that's going to point to where EURUSD should be moving. So EURUSD has been fairly trading in line with where the yield spreads are, more or less. So we saw these spikes up, we've seen these spikes up here. We've seen these lows held in, what's it called? We've seen these lows held in the yield spread, and the lows are currently holding as well, more or less in EURUSD. Market is expecting a dip to 106, but again, be very cautious. I think there is some interesting building up here that could possibly change dynamic. I'm saying this because I want to flag the risks, but big picture and based on macro and the way there's one bigger thing that's going on with the Fed, they're about to start quantitative tightening. That means it will drain liquidity out of the world, take USD out of the liquidity question, and that tends to be usually a one-way street for all USD pairs. I mean, all of them. You're looking at USDCAD, you expect this high. You're looking at USDJPY, expecting high. EURUSD lower, GBUSD lower, AUDUSD lower, all of them. Because once Fed starts tightening liquidity, it's a whole different game. It doesn't matter what happens on the political landscape, you're very likely going to see dollar higher. So what I'm trying to say is, in a very, very long-winded way, we had this dynamic in 2017 where everything is exactly the same, apart from where the Fed is about to start quantitative tightening. And I think that will be the straw that breaks the camel's back. And from a macro view, I cannot commit to a long EURUSD because dollar is about to find another leg higher, which in my opinion, unfortunately will mean, and let me bring this tool out for annotating. In my opinion, that would mean for EURUSD, it's going to give up these lows pretty quickly. So ideally, we're going to see a bump up here. The higher, the better. But once that sets in, once reality sets in, you're going to see a rapid move lower, and it will be pretty nasty. Some similar we saw with EURUSD in about 2018, was it? If memory serves me. Let me scroll back here. I hope you appreciate we're really taking the holistic view and also historic precedents into view when we try to trade these currencies, to really understand what drove them back in the day. So it was around these dates, if memory serves me, where this move started because there was a huge buildup in bullish bets, and the rest of the move happened because quantitative tightening from the Fed kicked in. As you can see, it was pretty much a one-way street. Was it the year we had trade wars starting again? So there was so much negative happening, just USD was bid non-stop. We're going to have a look at USDCAD in a moment as well, because I think there's a good trade coming up in USDCAD. To kind of spoil it already in terms of direction, I think the bigger move for USDCAD in the coming month will, the way things are developing, I'm going to probably show you on the charts, makes a bit more sense. But the way it's developing, it's headed higher. But let me wrap this thing up really quick. So Euro, very, very interesting space, very similar to 2017. but we're looking a couple of weeks out, Fed quantitative tightening. There is not a lot to love. And I like to come back here to a cftc positioning. It's very helpful to know that. And once the reality sets in, you have about 221,000 positioning long in euro that could get cleansed. If that gets cleansed, the 105 level is going to get reached in a matter of hours or day. Like 1 or 2 sessions, it takes 120 pip moves, 1 or 2 sessions like that, and you see EURUSD washout moment where all these long positioning is going to close out. So see how we built up this narrative? We built up this narrative to understand why they're long. We built up this narrative to chronologically point out where on the chart they went long and why. And now we're going to find the reason why they will start covering their positions. And I think post the election, they will find out things are not that good for euro, and they're going to start closing out this position. Hopefully, we're going to see those lower levels, which will give us a good trading opportunity. And I think I've flogged this enough. We've seen the data. We know what's driving euro right now. Usually in a run-up to these elections, I would like to have a look at Impact. They're really good with these things. They're really, you see, all these sell-side analysts, they always think they have the chalk-out analysis and it's a 50-50 coin toss. They're correct on the macro, right? But they're not correct what's driving the macro, what's the drivers in the moment. For instance, I would say if such and such happens, the price will go there. They're always correct, but they're not correct if it's going to happen. We have to, as readers and as researchers, we have to balance the risk of what's going to happen, what's not. Be that as it may, they're really good with the analysis when it comes to the political movements. They're very succinct, and usually the levels are not too bad. Saying that, I probably big it up too much. I need to see if they have any good analysis on the elections. Let's quickly read that. See if they got any good analysis on the French election. So this article is from the 21st, not too long away. European and different French bond have moved the big things. This is what we want to know. So FX market, you're taking more notice of the ECB French election risk, been playing out FX option rather than the FX spot market. Good, very interesting to know. We had to go into the options market and option volatility to figure it out. So they kind of take that away from us. We don't need to do that research. But I mentioned before, EURUSD implied volatility for Monday, 25th April had been trading 2.5 times normal levels. Decent performance from Marco in the first round, and TV debate has now seen EURUSD trade volatility dip back to 2 times normal levels. Barring a shock win for Le Pen, on Sunday, we would expect this event risk to pass without leaving too much of a lasting impression on EURUSD. It's a ECB policy normalization, which is driven by US in the short term, the rally in US yields. Dollar has stalled for the time being. ECB remarks concerning possibly July rate hike have provided EURUSD with a brief lift. Yet, a lot of ECB tightening is already priced in. We prefer to be back dollar. Apologies, too much coffee. We prefer to back the dollar this year without any EURUSD near-term gains close to above 110 will be sustained. Pretty much what we just the conclusion we came to. It's actually trading way lower than a 110 level. But big picture, we are closer to 105 than we ever to breaching these levels. This is what they're saying, and this is what we have to take into account as well as we will be moving into the next week. Very succinct, very to the point. I like that. We're going to have a couple of weekly drivers next week. So I'm going to bring up just one research. I really want to keep this video a bit shorter because we have got 1 or 2 good trade ideas we can concentrate on. I don't really want to go too much further out. So weekly focus is on bond route, bond bears. Let's actually take it to the article for a change. Usually I just read the headlines, but today we're going to treat ourselves and actually go in and turf into that. The bond bears continue to have an upper hand at the moment. We're pretty much in a bond bear market as it looks like. I'm going to quickly skip over these. Yes, bond markets have also seen PSL hawkish comments but had push yields higher. The blackout period ahead of the meeting on the 4th of May. Important data, French election, Tuesday, durable goods, US new home sales, Thursday, GDP for Q1, and US core PC and personal spending. Really important data. So coming on Friday. Key global views, rising stagflation risk from war in Europe, weaker growth in the coming quarters, but not a global recession, higher commodity prices to keep inflation. Looking ahead, the presidential election one of Sunday will be an important event for European markets. Polls still favor Macron. It is going to be a tight race. trigger negative. France is increasing headwinds, both positive quarter. Inflation risk remains skewed to the upside despite latest stabilization in oil, gas, and electricity prices. We look for further climb in headline HICP rate above 8%. Monetary policy, COVID, important for outlook. In Shanghai is shut down. US will get GDP first quarter, and now home sales will also provide input to how economic activity. I will listen closely with Bank of Japan and address global pressure for high yields next week. Interesting. So I doubt they're going to do anything to hurt the yen, sorry, to help the yen, but let's see. And Scandi movers, I don't dip into them. That's not my market. I know my limitations. So next week we'll have, obviously on Monday we'll be kicking off, Sunday really, if you're in Europe. We'll kick off the week by having a understanding what they're, sorry, I'm looking at the wrong week here. We will kick off then by having an understanding how the election moved along and what they did, how far they got. Why am I in March? What's happening? Let's go to this week. Better preparation next time, I promise you that. So we are starting the week on the 24th, bank holiday. Does it sound about right? Yes. So we will be then trading on Monday. We get a better understanding what Europe is doing. Remember, we will be looking to publish short EURUSD based on the dynamics. So ideally, we'd like to see some good rallies to sell into. That should be our mindset. Anything close to 110 is great. And on Tuesday, we will have data, BOG, unemployment rate from Japan, trade balance, USDJPY core goods. I can't make any sense of trading these right now because it's not a driver for the market. It would have been a driver if the Fed said we are looking at capex, but right now they're not really looking at that. They're just looking to slow down the economy. So not a lot to work with that. Consumer confidence, maybe could wiggle indices. So first 2 days, we'll be really just trading the aftermath of the French election. And then we have some CPI numbers from Australia. I'd be really interested to see what the market reaction is to that. Usually for guys, you don't see a reaction to Australian quarter-on-quarter CPI because it gets printed every 3 months. It's pretty much useless by the time it comes out. But right now, it's really interesting because RBA is signaling they would like to raise rates, but they haven't done yet. So these data points become increasingly, these inputs become increasingly much more important as we are moving along into the year and see what the RBA wants to do. We have some crude oil inventories on Wednesday. Really interested to see what oil is doing. In my opinion, oil should have held the 100 level, but it wasn't one that I was going to trade because it's so incredibly choppy right now. So after I hit around 25 level, it was really undone the whole Russian invasion rally. And going from here, gun to the head, for me, oil will have to do some really incredible to really move higher. Initially, I really wanted to see it higher because I saw data coming through high, but now the way things are weighing out, I really has to do something that is not priced in, nobody knows. It has to be some really incredible to find another leg higher. Therefore, I really expect it to move lower going forward. And I think it can crack the 100 level very easily going into the next week, even ahead of Wednesday. So keep that in mind. Sometimes I say stuff, it doesn't really click. So I'm going to take my tool here and draw on it, where I think that these levels there should pretty much hold. 100 level gets taken out. Even these levels can get taken out once the reality sets in there. Look, this whole oil rally has kind of peaked around these levels. It's way too expensive for the consumer. And what the Fed is doing there, they're hampering that the whole growth dynamic. Some say this is a triangle and you're looking for a breakout. You don't need to. You already know. Based on our analysis, we're looking for this to come lower. So don't wait for a breakout to trade it. We're on a good no basis that these level lowers are about to come. All right. We draw on charts that way. You see it looks like a bit of a doodle. And moving on. So again, look, we don't have any important data, but we have a sense of what market already knows and thinks. And then we will have the BOJ outlook report, which would be interesting in the monetary statement. It's never as interesting. It's only interesting at this point because behind the scenes they say, oh, yeah, it's too cheap. It keeps moving too aggressively. So market will be looking into that to see how if they're going to come up with a way they can stop it. I doubt they can. I think maybe on some other pairs they can. I think on USDJPY they can't. So, and that's the one I probably will be focusing on. I usually focus on AUDJPY and the other pairs, but right now I'm more UJ bull, to be honest. And you can also see that we're trading another inside bar here, expecting this to really push higher. We're not far away from the 130 level, and I think we can nip it. I think we can clip that level very soon, hopefully next week. And that's the direction I'll be trading. Again, sometimes visual makes more sense. So I think this inside bar can break higher, and 130 is definitely in the making. If you're going to see a dip around here post the French election, I am certainly a buyer. If for whatever reason we dip down here, I will certainly look into buying as well, as long as my narratives hold. So as long as my yields holding higher, and as long as the Bank of Japan doesn't come up with a way to aggressively buy their own currency. There was talk about that the United States Treasury will help the Ministry of Finance in Japan to sort of collectively all work together so the yen doesn't appreciate as much. I think it's a big doing for them to try to do that. So they will talk about it, but I think it will take more than that. They really need to take some real actions. I think I read the article, they did it once in the 90s and it didn't last that long. Yen depreciated anyway, I think a couple of weeks or a month after that. So something to keep in mind. It's going to be some headline, ball busting moves maybe, but we are bullish. And now see if we can make any use of data, because up to this point, there's really no data I want to trade or can trade. Apart from I'm interested to see, I've shared the chart before, I'm not going to do it again. 9 out of 10 times after the first advanced GDP quarter-on-quarter reading for the United States, 9 out of 10 times, honestly, you see S&P 500 rally. So really interested to see if it can happen again, because we're literally a week or so, 10 days or so away from the Fed starting to raise rates aggressively and quantitative tightening. But in my opinion, I think you can come through again. So I think in S&P 500, you're going to see the rally. I don't want to toy with levels. I'm not even going to pull up the chart because I want to see where we are trading on Thursday. And then I think we're going to see some movements post that reading in S&P 500. You see, honestly, when I show, when I'm going to try to do a live session on Thursday and cover that, but you will see how many times it's like this magic button. As soon as that GDP data comes through, the following next day is just bullish, bullish, bullish S&P 500. I'm hoping we're going to see the same thing again, quite confident. Finishing the week on a Friday, and we're about to finish this video soon as well. Some really important data from Europe. I don't know why it's flagging it as yellow. It's really important, these estimates for CPI that are coming out, because they will be guiding us how the ECB will be doing. And we have the almighty core PCE coming out, and I will cover that as well. Usually after the London fix, we get some decent trades out of that. To wrap up this entire thing, first 2 days we'll be doing damage control on the euro, either long or short, someplace, definitely some huge volatility. For the rest of the week, I'm really interested to see if we can catch some upside in USDJPY. And to finish this video, I'd like to show you what USDCAD is up to. So this is the USDCAD chart. I'd like to remind you, well long around these levels, I had to close the trade early because I had a really bad, I took a drawdown, not really bad, but I took a 0.5% drawdown on GBP USD when I was short, and there was like a stupid rally for no reason. So I had to close the trade early. I would have, and just to tell you my trade management on that. So we were around here, this ridiculous GBP USD candle, you know, absolutely busted my trade. And it was only liquidity surge because I was short on the breakout, daily breakout here, like a proper amateur, right? Got short squeezed. I had to take it. I took it for a 50 pip loss. And I saw what's happening, but I thought, you know what, I can't engage with it because I don't understand why this move happening. And eventually you can see where it is at. Analysis was right, timing was wrong, so altogether it was a wrong trade. But I had to sacrifice the USDCAD trade. And here's the catch, If I was still in this USDCAD trade, usually when you see these pin bar breakouts, you see it come back to and bounce back again. So eventually I would have closed out anyway because there was some aggressive moves on USDCAD. So you could say in hindsight it was a good idea to do it, but eventually hit the 72.20 level was looking for. From here on, I'm still expecting this to go higher. When we were trading at these levels, I was really expecting USDCAD to hit 130, but it didn't. It went for this stupid move. I can't explain why it did it. But now we're back into the game, right? Right now, bulls regained their mojo. I think they did enough. Those that wanted to hold on to their trades, those that wanted to get washed out, are now at the equilibrium. You continuously see these lows getting bought. I really can't wait for this 130 level to give way, because I think that's the direction we're headed as the weeks move on, specifically as we're moving into the Fed interest rate move and quantitative tightening, which is happening not next week, but I believe the following week, which is going to be super awesome. So going into the 4th of May, I'm totally USDCAD bull, so I'll be looking to trade that. To wrap this session up, and I tried to keep it as short as possible, we're bullish USDJPY, we're bullish USDCAD, bearish EURUSD where we can catch it, and we try to see if the risk sentiment is there to trade a little bit of indices post GDP read on Thursday. Bear in mind, I did not put too much emphasis on analyzing the other pairs, because the magic will be happening, what's happening with Euro and USD. They are the main movers for the rest of the week. So the other pairs will be moving in line with them. They're not going to be the key drivers. So that's where we want to emphasize on, specifically, as I know some of you don't have time to just stick to the charts all day and find the volatility. Stick to those ones you know they're going to be the moves, and we should be trading on the right side of the market next week. Thank you, everybody, for joining today. I wish you a very successful week, and I'll be touching base with you throughout the week as well to see if we can catch those trades. Thank you very much, and that's all.